Nifty faces a critical breakdown level at 24064. Will it plunge 177 points today? Your Trade Vision pre-market report starts now. Good morning, traders. Welcome to Trade Vision pre-market report. Today, 2026, July 15th, Wednesday, marks another vibrant and promising day for the markets. Let us deep dive into the detailed reports. President Trump's reinstatement of the U.S. naval blockade on Iranian vessels in the Strait of Hormuz, coupled with demands for a 20% transit fee on cargo, has sent Brent crude surging past $85 a barrel. This geopolitical escalation immediately revives global inflation concerns and intensifies supply disruption fears, potentially weighing on India's import bill and fueling domestic inflationary pressures, putting the spotlight on energy-intensive sectors. US June Consumer Price Index data showed inflation cooling more than anticipated, with headline figures at 3.5% and core at 2.6%, easing some immediate Federal Reserve rate hike fears. However, Fed Chair Kevin Warsh, in his congressional testimony, reiterated no tolerance for persistently elevated inflation, signaling the central bank's unwavering commitment to price stability and keeping the door open for continued hawkish rhetoric, which could temper risk appetite across global equities, including India. China reported a significant 16.9% year-on-year surge in foreign trade for the first half of 2026, with June exports jumping 27% and imports up 36%, both exceeding forecasts. This robust performance, notably driven by strong global demand for AI-related technologies, signals resilience in global supply chains and manufacturing, potentially lending support to commodity-linked sectors and companies in India with significant trade exposure to China, while also highlighting tech's continued strength. The India-UK Comprehensive Economic and Trade Agreement officially takes effect today, July 15th, slashing tariffs across various sectors, notably reducing duties on UK-made automobiles. This landmark deal could significantly expand bilateral trade by an estimated £25.5 billion annually, lending support to auto manufacturers and potentially broadening market access for Indian EV exports. It puts the spotlight on companies with significant trade ties between the two nations. The Reserve Bank of India has proposed a simplified approval process for mutual funds, insurance companies, and pension funds, granting one-time clearance to acquire and maintain up to a 10% stake in banks. This move aims to streamline compliance for large institutional investors, leaving room for increased capital participation in the banking sector and potentially boosting demand for banking equities. India's retail inflation surged to 4.38% in June, surpassing the Reserve Bank of India's 4% target for the first time in 17 months, primarily driven by elevated food and transport costs. This data point could weigh on expectations for future interest rate cuts and may keep the central bank in a cautious stance, putting pressure on consumer discretionary spending and interest rate-sensitive sectors. Fresh US strikes on Iranian military targets, met by Iran's retaliation against UAE tankers, and US regional infrastructure have severely escalated Middle East tensions, leading President Trump to reinstate a Strait of Hormuz blockade and propose a 20% shipping toll. This disruption has already seen traffic plummet, pushing Brent crude past $84 a barrel, signaling elevated energy costs that could weigh on India's import bill and fuel inflationary pressures, particularly for transportation and manufacturing sectors. Recent major cyber attacks, including a significant data breach at Aflac Japan, exposing customer financial data, and compromises at KDDI and the US Homeland Security Information Network, underscore a heightened global cybersecurity threat landscape, with AI-driven attacks signaling a new era of risk. This rising vulnerability puts the spotlight on the resilience of India's financial technology and IT sectors, potentially increasing compliance costs and prompting a re-evaluation of cybersecurity infrastructure investments across various industries. Super Typhoon Bavi, now churning with winds up to 287 km/h, poses a significant threat to East Asian coastlines and key manufacturing regions, with China already bracing for its impact. This powerful weather event may lead to considerable disruptions in global supply chains and trade flows, particularly affecting electronics and other manufactured goods from the region, which could translate to elevated input costs or delayed shipments for Indian industries reliant on Asian imports. China's Changshan Memory Technologies, CXMT, is set to raise approximately $8.6 billion in an initial public offering on Shanghai's Star Market, positioning it as Asia's largest IPO of 2026 so far. This significant listing by the memory chipmaker underscores continued investor appetite for the global semiconductor sector, potentially influencing sentiment for technology and manufacturing plays in India, particularly those integrated into global tech supply chains, though it may also draw liquidity in regional markets.
You are watching Trade Vision! Smash that subscribe and enable the bell button right now. Like and share this video. Comment your love and share your happiness. Let's win together!
Foreign investors sold 739.69 crore rupees. Domestic institutions bought 2,927.71 crore rupees. This combination suggests strong local buying is absorbing foreign selling, likely stabilizing the market today. If we look at yesterday's sectoral data, we see a clear rotation out of Nifty Auto and Nifty FMCG, both showing weak yesterday's performance and negative weekly momentum. Conversely, Nifty Consar Durable and Nifty Media are attracting capital, demonstrating strong weekly momentum despite varied daily moves. Traders should position for continued strength in these gaining sectors. Let us look at global events. India's June Consumer Price Index, released on July 13, 2026, rose by 4.38% year-on-year, beating the street's expectation of 4.30%. This higher inflation could pressure the Reserve Bank of India to maintain a hawkish stance, potentially impacting rate-sensitive Indian sectors. India's May Index of Industrial Production, released on June 29, 2026, showed a strong 5.1% year-on-year growth. This robust industrial activity is positive for India's economic momentum, likely boosting corporate earnings and supporting the manufacturing sector. The United States June Consumer Price Index, released on July 14, 2026, at 6 p.m. Indian Standard Time, came in lower than expected. Headline inflation was 3.5%, below the 3.8 to 3.9% forecast. India's first ever Services Production Index for April 2026 was released yesterday, July 14th, showing robust double-digit growth in 14 of 19 subsectors. This new high-frequency indicator signals strong economic momentum, likely boosting investor confidence and attracting foreign flows into Indian services equities. The U.S. Federal Reserve's FOMC meeting concludes on July 29, 2026, with the interest rate decision due at 11:30 p.m. Indian Standard Time. Markets widely expect the Fed to hold rates steady at 3.50 to 3.75%. Global markets saw a generally positive session, led by a strong surge in Asian indices like the Kospi, up over 5.5%. European markets and US futures also posted modest gains. Indian traders could see a flat to slightly positive open today. Now, let's move on to some stocks highlighted in today's news updates and what's driving their attention. Biocon is in focus as Mylan Incre's 5.64% stake block deal settles. HCL Technologies faces pressure after brokerage downgrades, post first quarter results due to valuation concerns. Tata Consultancy Services sees action with July 15th as the record date for its 12 rupees per share interim dividend. L&T Technology Services reported strong first quarter consolidated results, showing robust revenue and profit growth. Lastly, Bharat Electronics secured fresh orders worth 572 crore rupees. Let's check what the RAS levels are saying for Nifty today. The breakout level to watch is 24086, while the breakdown level stands at 24064. Should the market turn bullish, resistances are at R1 24165, R2 24243, and R3 24322. Conversely, if Nifty falls, supports are seen at S1 23986, S2 23907, and S3 23829. Today's central pivot range shows TC at 24090, pivot at 24078, and BC at 24065. Analyzing the options matrix and derivative distribution. Analyzing the options matrix and derivative distribution, the pronounced shift in max pain from 24,200 to 24,100, coupled with a sharp decline in PCR from 1.574 to 0.775 on 2026 July 14, signifies significant bearish institutional repositioning. This implies aggressive call writing at 24,100, acting as a formidable resistance, while put unwinding suggests a breakdown below 24,000, targeting the 23,000 demand zone, with potential short covering limited by 24,100. The India VIX closed at 13.75, marking a 3.54% rise from its previous close of 13.28. With a mixed 5-day trend and VIX rising while Nifty is at higher levels, this indicates increased caution and potential volatility for Nifty, suggesting possible fall or crash risk ahead. The CPR is positioned at TC 24,090, pivot 24,078, BC 24,065, expecting normal movements in the market today. Gift Nifty opened at 24,050, a 36-point gap up from Nifty's previous close of 24,015. This significant gap up suggests Nifty 50 is likely to open higher today, indicating a potentially bullish start to the session. The no-trade sideways zone is identified between 24,064 and 24,086, where sideways movement is expected. A move above the breakout level of 24,086 could yield 131 points upside, reaching 24,217. Conversely, a breakdown below 24,064 could see a 178-point downside, targeting 23,887. Previous trading day, Nifty moved minus 16 points, indicating a bearish close. The weekly move was 13 points, while the monthly movie stands at 154 points. Since the close did not sit tight against either extreme, there is no strong directional carryover signal into today's session. And now, the moment you've been waiting for, today's final market verdict. Indian markets are set for a cautiously negative trend today, even with some positive global signals. Yesterday, the Nifty, Sensex, and Bank Nifty all closed lower, with Nifty down 0.66% and Sensex down 0.72%, both indicating a bearish breakdown bias. Nifty futures reinforced this negativity, showing a short build-up as prices fell by 75.5 points and open interest increased. The futures premium is also bearish, at minus 30.05 points compared to the Nifty cash close of 24,052.05. Looking at options data, we see a bearish directional bias with a put-call ratio of 0.775 and significant call writing at the 24,100 and 25,000 strike prices, creating strong resistance. In terms of sectors, financial services, banking, auto, and realty were the biggest losers, with financial services down 1.12% and realty down 1.97%. Indicating broad weakness. This aligns with the Nifty 50 stock breadth, where 34 out of 50 stocks declined. While global markets in Asia and Europe are higher, suggesting a potentially flat to mildly positive open for India, and Gift Nifty shows a 35.5-point gap up, these positive external cues are overshadowed by domestic inflation concerns and India's rising June consumer price index. Furthermore, foreign institutions sold 739.69 crore rupees, though domestic institutions bought 2,927.71 crore rupees. And that wraps up today's Trade Vision pre-market report. Don't miss a beat. Subscribe and hit that bell for daily updates. If you found our insights helpful, please give us a like and share this video with your network. We'd also love to hear your thoughts and suggestions in the comments below. Here's to a truly profitable day.